Without hyperbole, we are going to see both in Canada and the rest of the world the worst economic numbers that we have seen in modern economic history. And I say that without exaggeration. Almost every single economic data point that we are going to get is going to look the worst it's ever looked. But there's a reason for that. It's in part because we deliberately shut our economy down, but it's also because we're compressing what would typically happen over a 12-month or longer period into a 3 to 4 month period. So the damage that we see from a typical recession is going to occur very abruptly. And when you say, should we be ignoring that number? Well, in part, we should be very aware of the depth of the problem, because the worse this goes in the next 3 months, the harder it is to recover from. But I'm a lot more focused on the duration of this issue. The longer people are unemployed, the longer we're not spending, the higher we see defaults go, the more businesses come into trouble. We have a lot of fiscal support, a lot of monetary support that is intended to bridge the gap between now and what we'll call the afterlife of this crisis. But the longer that goes, the longer that rebound happens, the harder it's going to be for this economy.
Now, in terms of the support that we're seeing, a lot of it seems designed to kind of hit pause, right? To say, pretend your rent isn't due, or that you don't have to pay your employees. The problem, of course, is that there's no way of knowing how much economic activity comes back with some kind of pent-up demand on the other side of this, and how much of it is just gone forever, and how much of it changes, right? This may be just long enough, Francis. The dangerous area is we change habits, and businesses kind of cease to matter because people do things differently. In terms of the flexibility of our economy coming out of this recession, just compare it for me to a normal recession, right? A normal slowdown and contraction where then we start to get growth again, helped by government stimulus. What might be different this time?
You've hit on all of the key points here. The first issue is that I personally believe that our economic behaviors have already changed. Even if we hypothetically came out of quarantine tomorrow, which we won't, how many apps have you downloaded on your phone to communicate with your friends, family, and businesses that you'll probably continue to use? Our concept of public health has changed very dramatically. Our concept of what we can accomplish when we work from home has changed. These are not things that are going to entirely unravel. But there's another component here, which you touch on, which is how much of this is pent-up demand. My sense is some things are pent-up demand, but when I say things, I really mean if you were missing, you had to buy a refrigerator because yours isn't working too well, yeah, you're still going to buy a refrigerator when we come out of this. But if you didn't buy a latte today, are you buying 2, 3, 4 when we come out the other side? Probably not. So there is a behavior component here, and I am a little bit worried about some of the consensus thinking, which is everything will go back to normal. A, that recovery is not going to happen overnight, but B, the concept of normal also has to change very dramatically. Even though this has been short-term pain, I think it is going to have very long-term changes on the way we think about growth.
And this is said when there are major dislocations. I remember post 9/11, which of course was a very short, sharp dislocation. People saying, "Oh, video conferencing will take off and people will stop traveling for business." We didn't really see that. We may have seen it at the margins, but we all kind of reverted to the mean pretty quickly. But to this point of like this is longer and it's different. In terms of the flexibility of our economy, is there opportunity here if we hit it right? In other words, a lot of the fiscal attention right now is gone at kind of bridging over for people that just need to get, to the next rent payment. But should we also be thinking about stimulating in ways that are strategic?
Well, that's exactly right. So there are some elements of this that are different than after 9/11, which is probably our best comparison period. But how I'm thinking about COVID-19 is as an accelerator on so many of the economic trends that were seeded in 2018 and 2019. The best example was deglobalization that began with tariffs being applied and trade wars and borders going up. This is the second economic shift or economic hit to the concept of globalization. We were also talking a lot about the fourth industrial revolution. Governor Polas from the Bank of Canada really trying to stress that our data probably wasn't encapsulating the technological shifts that we're undergoing. This is an accelerant on our work from home capabilities, our concepts of how much can we do outside of the corporate office. And third, there had been some beginning discussions about modern monetary theory, central banks printing money, the concept that deficits maybe don't matter. And those were really out of left field concepts that just nobody agreed with, or very few people agreed with. And now, just a couple of weeks later, the concept of universal basic income is now commonplace. We have very right-wing conservative, fiscal conservatives in the US who have advocated for universal basic income. So these concepts and issues that had just sort of started, their embers were flowing. Now we've put that accelerant on top. that's why I believe that what we're experiencing now is going to change a lot of the ways we think about everything from government debt to technology.